Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and I am excited. Sit down, sit up, take some notice. Dr. Nomi Prins is with me today. And Nomi Prins is a former Wall Street banker. She is an investigative journalist, and she is a best-selling author. 7 books, of which her latest book, Permanent Distortion, is coming out in a couple of weeks, in about mid-October. I suggest all of you all know I love you to go and read sensible books. Collusion was her last book, which I've read. Permanent Distortion is coming out. We're going to talk about that. And I met Nomi in person at the Rick Rule Investment Symposium in Florida not so long ago. And we had a very, very interesting conversation. I said, Nomi, I need to talk to you again. Dr. Nomi Prins, thank you so much for your time. It's great to see you.
Thank you so much for having me on. And I have such fond memories of not too long ago hanging out in Florida at the Rule Conference. So very, very warm memories.
Face to face. It was so good.
Yeah.
Now,
so good.
Nomi, one of the things I want to talk about is that you work with Bear Stearns in London. You also worked with Goldman Sachs on Wall Street. You're a former Wall Street insider. You walked away from that and you started becoming an investigative journalist and really, uncovering what's really going on between Main Street and Wall Street. Why?
Well, basically, a number of reasons, one of which was that I was increasingly irritated, really upset about how Wall Street had been so callous to Main Street. When I say Main Street, I mean the global Main Street, particularly in the years before I left Wall Street, which were the late 90s. There were numerous debt crises around the world, currency crises around the world, and a just certain irresponsibility for the role in that Wall Street and the banking sector in a whole globally had participated in, and to create that sort of instability for the real economy. And so there was that budding reality, and also the fact that Wall Street was changing, the banking sector as a whole was changing, and how they even dealt with their own clients, in using their clients basically just to make profits, as opposed to growing the relationships over time in a really more acerbic way. And I didn't like that, but it was a turning point for me around that time, basically when 9/11 happened, when I was on Wall Street, sitting in my corner office at Goldman Sachs, and then later walking over to the trading floor, which was right next to my office at Goldman Sachs, and basically seeing what was the beginnings of that terrorist attack. When I say the beginnings, the first plane had hit. We didn't know that it was a plane at the time. Cast our minds back to that. But what we did see was a lot of debris all of a sudden all around our windows on the 29th floor. And then, of course, I saw the second plane fly by my office, which was really exposed to the water side where it was coming in from before it hit the towers. And again, didn't know what that was at the time. But I mean, at that point, it was noted that it was noticeable that it was a very large jet. And but in the days that followed, it was a very chaotic time, obviously, for the world, for New York City, and all around Wall Street, and a lot of thinking was done by a lot of people, me in particular, in terms of what life's all about. Where do we go from here? What's my real calling? There was also just a certain sense of just wanting to figure out a way to make money out of this crisis on Wall Street that at that point just did not sit well with me. I took it upon myself to go and volunteer at our armory, which was close to where I lived on middle Manhattan, and try to help basically what I could do with a number of other volunteers. Connecting people who had been lost, names that we had lists of, to articles that were picked out of the debris there for that following week. Whereas at Goldman Sachs, the call was to go back to the office as soon as possible. And I just at that moment realized that those two tensions, wanting to sort of be on the ground and work with people and the realities of life, and what was going on in the towers of Wall Street, were just incompatible in me. And so I quit, basically, and became a journalist and a writer.
And when you did quit, was that, how did that sit with you? Was it because that's a big change? And
it was.
Do you think that if 9/11 hadn't happened, would you still be with Goldman Sachs? Do you think that was just a massive wake-up call to make you say, there's more to life than sitting in an office making money for Wall Street?
That's a really interesting question. I think I was going in that direction internally because of the other things I was talking about, just how Wall Street was changing and um, just how aggressive all of it was, not just internally, which was always the case, but also relative to clients, relative to the outside world. And it was building upon me that just didn't work with with who I was. I don't know if I would have left when I left if 9/11 hadn't happened, but I think I was getting to that point. And for me, writing, analyzing, explaining was always kind of a second nature. And so even before I left, I had I guess the fortune of being able to take writing classes at night when I was able to
Oh,
get to them, which was rarely because mostly I was at the office at night. And just sort of flexing that muscle. I mean, I wrote internally. I ran research groups, so we produced. I wrote research reports and analysis of the economy and so forth internally. But to basically, write in a different way externally, away from Wall Street. So I was doing that. I was becoming more interested in that anyway. And I think that at some point that transition was going to happen. It's just that was kind of, like you said, a wake-up call in terms of the exact timing of it.
you've written 7 books since you left, and they're all bestsellers. You've got a new book coming out. We'll talk about that in a moment. But going back to when you first started writing, how do you start to uncover what's truly going on? Are you interviewing people? How do you come up with where this book is going to be going?
So before I wrote my first book, which was a real expose on what was going on in the energy markets, the telecoms markets, and the Wall Street connection to all of those at a real corporate corruption, fraudulent period with Enron and WorldCom and other frauds that were coming out massively, of which I was on the other side of that, where banks were very much enablers of what happened and sort of partners along the way in different manners. And so I saw that from the inside. I saw a lot of companies that didn't seem like they were going to be viable, over the near term or the long term inside. And I also, when I quit, I had a very good friend slash reporter, actually became a friend, who was writing at the Financial Times. And he was always talking to people inside on background, because we weren't really allowed to be quoted in the press back then.
Oh, yes.
Now it's very commonplace to see, Goldman Sachs this said that, and JP Morgan that said this, but at the time it was very, very structured. You really couldn't say what you thought anyway. But I did talk to him on background, and when I quit, he said, you should write about what's going on. You should figure out a way to do that. I'll help you. And I said, okay, well, I mean, I know a lot about what's happening. And obviously in journalism, you can't just say things. You have to actually go and get first and second and third sources. And so, to be a real journalist, not just sort of an op-ed sort of I'll spew what I'm thinking kind of writer. And so that got instilled in me very early on. And I wound up getting my first journalism job. My first article I wrote for Fortune magazine with a co-writer, actually the senior writer, on the piece she was named Julie Cresswell. I think she's now at the New York Times. But at the time, I pitched the idea of writing a piece on a company called Global Crossing, which was a telecom company that looked horrid, that had a CEO that wound up, paying all sorts of penalties and et cetera, as did the company. And I just wanted to use that. And I was like, no one's talking about this company. Everybody's talking about WorldCom, but here's kind of the other WorldCom. And so they hired me $1,000 for the article, which I worked on for 6 weeks. Very big difference from what I was getting paid at Goldman. And I didn't have a corporate ID anymore. So I walk into the building where, it's Time Life building where Fortune magazine was with my, here's my driver's license, here's my ID, to write this piece. And I learned a lot from her. And we called sources, we called people who worked at the company, we called people who have been fired because of a bunch of mergers that occurred in the company. We got, we interviewed, just a substantive amount of people, facts, read SEC documents, and did everything that one does to have a solid piece. And that piece is still floating around the internet, I'm sure. I think it was called The Emperor of Greed.
Oh, I love it.
Global Crossing, and I wrote, I think it came out in 2002. 20 years ago. Wow. But that was the first piece. And sort of that she did much of the writing on that. I did much of the journalistic work. I mean, it's really very much an apprenticeship in a way. And that was my first start, and sort of went from there.
So when you were at Rick Rule's conference, you were one of the keynote speakers. And one of the things I remember you saying is that there is your book, Permanent Distortion, I love that name, Permanent Distortion, we'll get into that. But you said there is a distortion between assets and the real economy. Mm. What do you mean by that?
So one of the things, and this is a through line in the book, and what I was noticing, I think we all were in some way before this book comes out, is that in the wake of the financial crisis of 2008, we had a situation where central banks went crazy in terms of both reducing rates to zero and producing, and basically manifesting trillions of dollars worth of money to buy debt, to buy assets from the markets, from the banks, and therefore from the markets, kind of at the spur of the moment, in order to combat this financial crisis that had occurred on Wall Street, that had been caused by Wall Street. But nonetheless, a number of banks, central banks around the world, colluded. I mean, the book I just wrote before this one's called Collusion, but what they did really was work together to keep the cost of money low, liquidity high for market participants, large financial institutions and their customers, more or less, and fabricate money in order to buy assets from the market in the form of debt from the standpoint of central banks, and allowing leverage of those assets in a very different way from what had caused the financial crisis, but still nonetheless leverage through the banking system. And that created this market that rallied substantively because it was turbocharged by all this fabricated money that flew into it from different ways. And the real economy, which this money was supposed to ostensibly help, or this policy was supposed to help, or at least that was the story, didn't do anywhere near as well. So what you had was, and I have this as the first graph in the book. There's not a lot of graphs in the book. I generally don't have any graphs in my books. I did for this, for illustrative purposes. There's a few, but the first one is basically showing how much the markets accelerated up while the real economy did a kind of flat line, up 2%, up 1%, and basically did nothing as the U.S. economy during that whole time, from the financial crisis through basically the pandemic. And then of course we had fall off a cliff, jump back up, etc. But during that entire period, the economy basically flatlined, and markets didn't, because they got the money. And so that's where these distortions started happening. And so as a result, when a lot of money is flowing into what I'll call easy assets, and stocks are easy assets, certain bonds are a little less easy, but when money is just basically flowing into places, it doesn't necessarily stick around for the longer term projects, for infrastructure, for mining, for things that basically require time and growth and a commitment and ups and downs and real people and just all of those things. Yes, some of it did. And yes, companies that, were around then and are around now, made things happen. But there was a distortion, a gap between money going into real economy and real production and real manufacturing and real exploration and all of that, relative to all of the money that inflated the markets. And that basically is still there to do that, because in the wake of the pandemic, and that's why I call it a permanent distortion instead of just a distortion, which was building into the pandemic, and the permanent distortion that's happened since is that the central banks went back and did the very same thing they just done during the financial crisis, which had almost zero impact on the real economy relative to market assets, and just doubled down on it. And now they had an extra reason, like economies were closed, they needed to sort of jigger them back up. But at the same time, they grew their books, the size of the money they fabricated, assets they bought, in a few months to exactly the size that they had taken a few years to do during the financial crisis. So all of a sudden they accelerated the production of money. They accelerated the buying of assets in an extreme manner, to the extent that the Fed doubled the size of its book, and about a total of $41 trillion, not all of which was manufactured during the pandemic, but is currently in the world, that has been produced by central banks in return for debt that's hanging on their books. And so we've had this permanent distortion, because all of that money and just how it works and where it goes and where it doesn't go it says or confirms this fact that it's never going to go the same way to the real economy as it does to the markets. And even when the markets are wobbling, and like we have right now, even during these uncertain periods where the Fed's hiking and everybody's in the market participants are very concerned and things are uncertain, the reality is the markets are still going to outperform the real economy.
Yeah, because it's you said, I think in collusion, that the central banks all get together, they all collude to make sure that they're okay. But it's like the average man on the street, a woman on the street, doesn't benefit from any of this. It benefits the central banks and big business, Wall Street, if you like.
Correct.
And that's going to continue, isn't it? Because they're not stopping. They're increasing interest rates, though, but that's increasing asset prices. Where do you see this heading?
So I do think that this is a permanent situation that, at least through my lifetime, I honestly, for decades at least, where when there are crises, whether they are a virus, whether they are financial crisis, a debt crisis, these sort of bigger or mini crises along the way, when central banks, particularly the Fed, deems it's necessary and appropriate, there will be more money produced to buy more assets. Rates will come down again. They might sort of bobble up and down, but we're in this world now where the remedy to extreme crisis, financial or otherwise, is the central bank production of money. And the fact that the central bank of the United States, the Fed, could produce $4.5 trillion worth of money in a few months is an extreme example of just indicative of the fact that there's no legislative cap on what can happen. And when I talked about collusion in my prior book, what's happening now is a different kind of collusion, because now the Fed's raising rates, the dollar's very strong. Other central banks have to kind of do the same thing. All the central banks have to pretend that they're fighting inflation, because that's what the Fed is saying that they're doing, even though we know that any rational human knows that there are so many elements of this particular inflation that have nothing to do with central banks, or certainly can't be controlled or tamed by central banks without literally re-shutting down the economy, or if not, dribbling it dry over just a extended period of time, which still won't impact the price of food or the price of fuel or or anything that we need to basically power our world. So that's where we're at right now. And where does that go? Again, I think it just goes into these bigger and bigger patterns of what's the Fed going to do? Is it going to raise rates? Okay, is it done raising rates? All right, what's the Fed going to notice in terms of data that's going to make it stop or make it reduce its pace of hiking rates? When is it going to pivot back to cutting rates again after being neutral? When is all this stuff going to happen? And that's now baked into market focus. And even though right now there's a lot of talk on and every news channel that talks about it, every business news channel that talks about it, about the fact that we're in this period now, the Fed's tough on inflation, the reality is we're in the midst of a process where the Fed can't necessarily do anything about inflation. And now we have economic slowdowns, and we have energy crises, and we have food crisis. We have a lot of other things, and we have a lot of issues with the dollar versus other currencies and so forth, that at some point become apparent enough that the Fed has to not acknowledge that it can't do anything about the related inflation, but that it can look at these negative figures and say, all right, well, we'll stop for a minute. But again, all of the focus on that, the fact that we are even talking about this is what's making this process something that's going to be embedded into how we see markets for decades.
I think because a lot of people talk about inflation, stagflation, deflation, inflation. I think you called it greedflation, didn't you?
Yeah, in my book, I called it greedflation because the fact is, the inflation we're dealing with now, specifically in power and in food and in shelter. So three main things that we all kind of need in some manner, and that we all pay for and need to pay for in some manner, right? So the way that inflation has gone down is some of it is related to economics. Some of it's related to, we shut things down, we open them up, it took longer to open than, relative to demand for the products that we went without. And then we have, a situation geopolitically between the Ukraine and Russia, with Russia invading Ukraine. And then we have pipelines going out. And then we have Europe not being able to get natural gas. And then we have natural gas prices going up. And then they go up throughout the world because there's only a finite amount of supply. And then it goes to the States, it goes to Australia, it goes to, and then we've also got all these emerging market countries who have high inflation because they need to import certain products, and it's costing them more and more every day because they're fighting against the dollar, because the dollar is increasing, because rates are increasing in the States, so they have to raise their rate. And there's all these like vicious cycles going around. But on top of all that, the extra sort of icing on that cake, from a greed inflation standpoint, is that companies and traders along the way can bid up prices that are already bid up for other reasons. And they can overcharge more for, say, energy or electricity and bills that are already more costly for supply side reasons. So it's like a piling on to economic and sort of external factors, the extra charge of trading or of raising bills for consumers or raising prices for consumers.
Which actually only hurts the poorest in our world. It doesn't hurt those that, if the electricity bill goes up, yeah, that's okay, I can deal with it. But for the pensioner who lives out west that says, well, do I turn my lights on or do I put food on the table? That's a massive issue, which is only going to get worse.
Well, that's right. And we're facing winter. Actually, we've had, tremendously difficult challenges from Mother Nature's standpoint over this year. We've had droughts, we've had extreme heat, we've had, you've had fires. There's all sorts of pulls on energy that we have this summer. Now we're going into the winter, where we as a world haven't been able to store enough energy during this period to really deal with a cold, hard winter. And that's why, for example, in Europe and in the UK and in Japan, there's all of these warnings about how to prepare for this winter. But in the meantime, everybody's electric bill has gone up. In the United States, about 20% of families are now behind on one or more of their electricity bill payments, more than they were during the pandemic time.
20%.
20%. 20%.
Huge.
That's a study that just came out in Bank of America, studying just what they see in terms of consumers, because they see or companies that sort of run credit cards see when utilities are put on credit cards where people basically pay with credit because they can't afford the extra for their utility, for the electricity costs, and then they can't pay that. So that is increasing, and we also have a situation where people are also, they're behind and they're going to have to sort of repay, and now they're getting higher interest topped up on top of that because rates have gone up on the money that they borrowed to pay the bills they can't pay. And so this is something that's not just happening in the United States, it's happening in other countries around the world, and it's causing, and it will cause, unfortunately, more production to close down. Now, going back to central banks, they'll be like, all right, well, production goes down, then then somehow the economy is going to slow down, so we won't need as much gas, so gas prices will go down, so inflation will go down, yay, we win. But that's like so like convoluted and just ridiculous. But and it could happen, but I mean it is ridiculous. It's going to take a lot of time. But in the meantime, what's going to happen is people are going to be stretched. Like you said, the poorest people, the lower middle class, the people that just don't have that extra money for those extra utility bills. And I don't know anybody, certainly in California or anyone I've talked to. I was just in England for a couple of weeks, etc. People around the country, people around the world who has not had their electricity bill go up this summer relative to last summer. There's nobody on earth that is not paying more this year than last year.
Yep.
And significantly more. And when you get to a point, and it's a scary stat, but if you get to a point where people on the margin, people who are basically deciding food versus warmth or rent versus warmth, you get to a situation where we have what are called, fuel crises or fuel poverty, which is something that's rearing its head in Europe, in the UK, because and we're not in winter yet. And so this is definitely a problem. And part of that goes back to permanent distortion, because if there had been more investment, not just in alternative fuel, that too, but also even in augmenting the fuel that we have, the storage capabilities that we have, even with fossil fuels, to basically cover collectively energy needs in crises.
Yeah.
We wouldn't necessarily be in this position. That's not to say there hasn't been investment in those areas. Absolutely, there has been, and I believe that's a big opportunity for investment.
Okay.
But it just means that with a lot of money washing around, it's not, at the sort of build up to this period, it hasn't always gone, and policy hasn't always gone, and strategy hasn't always gone to those things that need the most time and the most effort and the most sort of patience to establish for when times are in crisis.
Patience. And let's talk a little bit about patience, but I also want to keep on this energy crisis because it is an energy crisis. It's not going away. But if we have a look at the world today, you and I are talking on Zoom. I've got the lights on. We've all got mobile phones. There's more and more people that are going to have these devices that use more energy. And you mentioned the fact that we haven't invested in this. People seem to think that you can just turn a tap on and a gas field comes on, and there seems to be a disconnect. Do you see that changing at all? Are you seeing more investment and more understanding about the fact that this is a bigger crisis than anyone could have foreseen?
I see that there's starting to be that realization. And again, it depends where you are in the world. When I was in the UK, I saw it around me a lot more in the newspapers, a lot more in conversations, a lot more with pubs and just sort of that sort of small business community really struggling with we need to close 2 hours earlier because we just can't pay the bills. Right. And if we can't pay those bills and we need to close to basically conserve that energy because that's a real cost, we're not selling drinks. So if we're not paying our staff as much, and so all that has a knock-on effect. So energy and the economy are very, very connected. So I do see in certain areas that there is that realization, but the timing is such that it's going to get worse before it gets better. There is and there needs to be investment in both sides of the energy spectrum. There needs to be more investment in storing what we need and use on the fossil fuel side, and there needs to be more investment in renewables and transitioning in energy. It needs to be a full thing. It can't really be an either or. I'm a big fan of the earth. I'm a big fan of protecting it and using renewable energy and building those processes. But I also recognize that we have things in place that also need to be augmented at the same time that this transition is happening. Is there investment in those things? Yes, but the problem I think has been that there seems to be a need to choose between one and the other and not invest in either one enough. And I think that's been the problem, and that's one of the reasons, again, aside from the supply side problems, the fact that we've come out of a pandemic, and like you said, you can't just switch on a plant. You can't just switch on a coal plant. I mean, there's a lot of things where both in the transition and because of economic shutdowns, we're taken offline. You can't just put something back online. There's a company out in Arizona, Fremont Mining, and it's a great company. I've been out there many times. I visited their mines. They've got a huge copper mine in the middle of Arizona. They own mines around the world, and they had to take one of their sort of mining operations offline this year because their costs are rising by more and more quickly than currently the price of copper has been rising. But the problem is that, and they're making just a time decision. But the problem is when they come back online, it's going to take a minute to restart. And this is not the case with them. It's the case with just anything where there's a need and a use for what they're mining and what they're producing. But there's also a real life timing issue with the cost of that versus sort of other related costs that you can't control within the company, and then there's the outside economy. So a lot of this is happening right now. So I do think that we're facing a sort of longer term energy crisis, more acute in different areas than in others. For example, in Europe relative to the U.S. But that ultimately, the cost of energy, particularly of fossil fuel related energy, is trading on a global market. And if there's a problem in one country or in one region or in one continent, it reverberates in prices throughout the world. That's where sort of greedflation trading also kind of helps it exacerbate along the way. And I see that happening. Natural gas prices have already spiked to 14-year highs. There are supply problems there are storage problems there, and 40%, for example, the UK is powered by natural gas. 30% of the US is powered by natural gas, right? So if you start to have storage problems going into the winter again, going back to what I said a little bit before about weather, this creates higher prices and exacerbates the problem of being able to pay for that source.
And there seems to be a little bit of a lag. But I go back to something that you said when we were both in Florida. You said it is a permanently distorted world because we're in a new period. But you also said you're optimistic about this. So with
yeah,
all the doom and gloom.
How does that work? Well, I'm optimistic that at some point these problems will scream for a solution, and that will entail investing, for example, in energy across the spectrum of new energy and green energy through augmenting the current energy that we use, or sort of that whole spectrum. And I do think there's opportunity in that, and I also think that that part of the distortion that created this money flow into certain less time-intensive assets will come back into the more time-intensive assets because it has to. So there's no reason other than the fact that we have these crises, we have these moments. The money is available.
Yep.
It's just a question of where it goes, and I do believe that it will go into the energy spectrum. It will go into infrastructure building. We've already seen more governments this year pledge money to that, and as a result, Wall Street pledging to that and funds going into that. Again, we've also had a lot of negativity in the market recently with rate hikes, but I see that as a less permanent feature of what's going on. And I do think that when the Fed, as we were talking about before, does back off this sort of accelerated pace of rate hikes, goes to neutral, eventually notices that there are economic crises around the world and goes back to cutting, that whole period is going to happen in the backdrop. And I think as we get through that, I like to think that these areas that we're not as focused upon as they should be for a longer term horizon will receive that attention, will receive that sort of pile-on of government funding, of the liquidity that's out there, of retail investment and of small businesses, and technological advancements, sort of getting a production, mining, finding, all of that. I think will have a sort of resurrection in this coming out period. That's why I'm positive. I'm not saying this is happening tomorrow, but I do. We've done this. This has happened before. What hasn't happened is we haven't invested in all the right things,
right?
And we're paying the price. And I think that we're paying enough of a price, and there is enough money out there that slight shifts in where it goes can really make a big difference. And where it goes it needs to go into real things.
And I want to get onto that because the audience out there, they're all scratching their heads. They're confused. They're investors. These are people that are saying, how do I not only protect my wealth, but how do I grow my wealth? And we've spoken about the energy crisis. Dr. Nomi Prins, do you look at the energy market as a place where they should be looking? And within that energy market, are we looking fossil fuels or are we looking new energy?
Yeah, so I mean, I do think energy, and I look at 5 themes of where I think we have opportunities as a result of this permanent distortion and what we're going to see next. And the top of that is in what I call the new energy area. Aside from that, I've got infrastructure, meta reality, which is more the technology of sort of development, new money, which is sort of DeFi, basically expanding away from the current financial system, as well as what I call transformative technology, which basically sort of connects a lot of those dots and is needed in energy, is needed in infrastructure and engineering and so forth. So those are the 5 sectors. I on top of my mind in all of those 5, the biggest opportunities right now are in new energy. Now, new energy also includes fossil fuels. It's new is basically upgrading, updating, and finding better storage mechanisms and cleaner ways of producing and distributing the fuel that we use while we are transitioning and finding better storage capabilities for wind, for solar, for geothermal, for nuclear, for other forms of energy sourcing. So basically both of those things happening at the same time, ultimately evolving, I think, into the renewable and alternative energy space, but sort of happening at the same time as it's evolving. And there's energy technology that's needed for that. And then connected to all of that are the materials, the metals that are going to be used for that transition. So your lithium to create your batteries for your EVs, your nickel, your liquid energy, or your sort of storage capacities that are developed for saline types of batteries. So basically for big storage facilities. So the idea is that we need better methods of storing and cleaner methods of storing and sustainable methods of storing energy. So there's a lot of, I think, growth in those areas. And then therefore we need all of the supplies and the metals and the materials that are part of that. And then of course we have the physical manifestations of that, your EVs, your electrified plants, and everything else. So I see this entire space as very, very rich in investment opportunities. Now, of course, right now, the part of that space that's doing the best is your natural gas companies, your utility companies, your oil companies, give or take the volatility in those. And that's what we've seen very recently. And then sort of add that the adjacent areas like fertilizer that basically needs nitrogen that's used for food, because we have multiple food shortages around the world because of weather, because of geopolitics, et cetera. So all of those spaces and the technologies, the companies that are involved in that transition, sort of growing all of our energy needs and storing all of our energy better and cleaner across the spectrum, I think, are where there's opportunity. The market's been really brutal to the other part of that equation, to the new energy part of that equation most recently, well, as rates have been going up. And I think that's part of the permanent distortion, because all of a sudden the idea that the companies that aren't 100% operating all over the place, like right at this minute, don't deserve investing, or there's a fear of investing in those, and there's retraction because rates are higher. I think, again, that's going to abate as we sort of pivot back in these three stages: less rate hikes, neutral rate cuts along the next, say, year period. So I think that's going to give a real boost to the new energy side of energy. So I see this as a kind of 1 to 2 year transition, and being an investor, it's really hard to think of things in 2 years, even though investors think of themselves as long-term investors. What you really do is you look at the market and you're like all of my positions are down 40% in the sector, and it's really painful. But at the same time, that's where sort of the long-term horizon has to come in. You sort of you're driving with the one hand, you're looking at the road with your eyes, and you're sort of trying to make the two work together. And I think that's where we're at right now. There's the bumps are here. They're right now. We can't pretend this isn't. Markets are not certain anywhere in the world. But again, I think this is now a period of 1 to 2 years where that's going to be the case. But that period is also going to involve, and I think the opportunities will be in lithium, in nickel, in storage capacities, in new types of batteries, in the electric space, as well as in some of those fossil fuel spaces that are powering things in the meantime, particularly natural gas and nuclear, which will be coming more and more.
Yes, what's your views on nuclear? Because it is a carbon-free energy source. It's a lot of people. Fukushima happened in 2011, I think it was, and everybody had a freak out, but actually it was a tsunami, not a nuclear reactor issue. It was a tsunami. Do you think people's views are changing? Do you think that the uranium sector is going to be a good one to look at?
I do, and I think, and part of what's accelerating those feelings is what's actually happening in Europe, and particularly in Europe, in that nuclear plants and SMI, small reactor types of plants are coming more online now. And again, these things take a minute, right? So actually using the energy from nuclear is going to take longer than bringing everything back online. So we're in this multi-year process, but because of the geopolitical need to have some more control over your own energy sources. And so, for example, Germany, and this is where I say there's an energy sort of panorama. I didn't use that word, but basically there's old and new energy, and there's a lot of room in between. Germany taking nuclear power plants offline and now basically bringing them back online. With California, where I'm in right now, Governor Newsom saying, 1 minute, no to nuclear, and now it's a viable strategy that's being perpetuated throughout the state. And I imagine our elections are coming up in month and a half, that there's going to be some element of that on the ballot, just because we have referendums and stuff in California about sort of issues. But this is a situation where there's a need. And like you said, there was an accident. There was a horrific accident in Hiroshima. There was 3 Mile Island. There's things that have happened in the nuclear space over the years that cause pause and require better safety standards and require better technology to monitor those standards and make them happen. And again, that's where there's also opportunity. But I think ultimately, it's something that fits both bills. Nuclear power, you can store and you can produce in large capacity for running countries, and running cities and running localities, and at the same time, it's cleaner for the environment. And of course, the number one resource that's needed to basically manifest that is uranium. So again, some of this is buckled recently in the general market uncertainty and meltdown. But we got to look ahead, especially if you're an investor, and also just even if you live on the planet and you use energy. If places like Germany and California collectively so very anti-nuclear are now saying, okay, well, wait a minute.
Yeah.
That's just a sign that, okay, this is viable, this is necessary. And yeah, we absolutely should find a way to make sure it doesn't hurt anybody.
You're sitting there in California as I speak to you now. The US dollar is on a tear. It is just seems to be sucking up all the other currencies and continuing to be incredibly strong. Stronger for longer, Nomi, or do you think that there's going to come a time where we might move into a different monetary system which could affect the US dollar? And I guess I'm alluding to possibly central bank digital currency. Given that you know a lot about central banks and your background, what's your views on that?
Well, so even if we have central bank digital currency, from the standpoint, for example, the Fed, it's still going to be based on the dollar. It's just going to be in a different form, and I think it's important, and it's confusing because the whole idea of what a central bank digital currency sort of sometimes gets morphed into cryptocurrencies, and there are elements of that from the standpoint of technology and sort of how that coin looks, and I'll just call it the Fed coin, but that's just something that's based on or would be based on the dollar, because the dollar is what gives the Fed its actual strength. Now, this will be a different way to produce dollars. But the U.S. government, this is a ridiculous amount of debt we have, the power that the U.S. has throughout the world, that the prevalence of the dollar as a reserve currency, what a digital dollar would do, or a Fed coin would do, or a central bank coin from whether it's from Europe or the UK or Australia or what have you, is going to be a sort of augmentation of their currency in the first evolution, because it's going to have to be tested. With its own current banking system, it's going to have to be tested with against other central banks before it gets to a consumer level. Their stages would just be done, just because that's how just central banks operate. But the reason the dollar has stayed strong, and I believe the dollar will stay strong, is not because it deserves to be strong. And I've said this like throughout all my books, because I've gotten that question a lot. It's a valid question. You guys have so much debt. You're a big economy, but you're not actually a growing economy. You've got a lot of problems. Like, what's the deal? But there's just such a head start to the dollar that when we have these situations like right now, where the Fed, even before the Fed raised rates and basically solidified the strength of the dollar, which is what we've seen recently since March, but even before that, the dollar was on a tear. Since the COVID crisis, even when the Fed was cutting rates to zero and growing its book by a lot, because it's kind of like the best in like a bad group. If you would look at it from just the standpoint of the debt of a country relative to sort of its position in the world. And that's why the dollar has stayed strong. So it doesn't matter that the country's kind of not able to produce more than it borrows, which it can't. It's the fact, and most countries can at this point, but the US is no better and a lot worse than many. It's because of this power position that has been a first advantage, first central bank advantage that we've had literally since Bretton Woods, since the World Wars. And that's just been manifested by just the bravado, even honestly, of Chairman Powell to this day. We're going to fight this, we're going to do that. There's just a lot wrapped up in the dollar. And particularly in these uncertain times, and particularly when the Fed is even raising rates, it gives the dollar the strength. So I don't think it's going away anytime soon. I think China, the connection between China and Russia, and there's definitely chinks at the armor of the dollar that have been happening, and particularly since the financial crisis of 2008, and since we went off the rails with debt and with creation of money and money being at zero cost. But that's taking a very long time. And in the meantime, the dollar remains prevalent. It remains the safety currency. It remains the thing that banks need in order to operate, the thing that banks need in order to pay their respective debts that are denominated in dollars, and so forth. So there's definitely pecks along the edge.
Right.
But you look at the pound at almost parity. You look at the euro. Everything is just like you said. It's been demolished relative to the dollar. Will that come back a bit? Yeah. These currencies are tremendously weak. So are a lot of emerging market currencies. But will the dollar go away? Will the dollar crumble? Will the dollar be replaced by anything else in our lifetimes? No.
Oh, really? Okay. So you don't see, because you said China pecking around the edges.
They're pecking. Oh, they're going to keep pecking. But will there be in our life? Will there be a situation where, for example, when the pound became the dollar in like the world hierarchy, will that happen in our lifetimes now?
Okay. All right. Nomi, I want to ask you this. As I said before, I could talk to you for hours, but we'll have to get you back again and talk more about the energy markets. And I think what you call Enron 2.0. We'll come to that next time. Three things. What would you say are the three things that people should be doing? These are investors, they're looking at the market. And by the way, ladies and gentlemen, this is not investment advice. This is just Nomi's thoughts of what she's potentially doing. But what are you doing to sort of have a look at this and go, right, during this time of uncertainty and a little bit of unrest, if you like, what do you think the three things that people should be doing?
Well, I think from an investment standpoint, it's important to have patience, and that's the hardest thing to have when markets are like killing your positions, is to take the long view. And unless you're in a position where the company is like going bankrupt, or you pay attention to investments, take the hits, even if you're down 90%, take it if there's no viable path for that company or that position to come back in the next 6 years or 3-year investment horizon. Yeah, take that hit, but otherwise, have patience with your investments. And it's really, really hard. I remember when the pandemic first hit, my brother calls me up because he's got a kid going to college, and he last year or then, and he's like, what should I do? Like literally, like the college fund was at half. Because of the pandemic, what it was before the pandemic. And he's like, should I, take it out? Because I don't want it to go to zero. And everyone was very fearful back then for a minute, right? And I just said, we've had this conversation in 2008 as well. Same college fund.
Really? Okay.
Well, because it was smaller then, but I was like, no, just honestly, just don't look at it. Do not look at it. And it sounds very, non-proactive. But again, unless there's positions that absolutely are in things that are not viable over a longer term, or you need the money, just kind of don't look at it as much. Honestly, just don't look at it as much, except for those items. And also look to the areas where we have absolute needs, and recognize that even with rates going up, even with the economy being, slowing down right now because of even with inflation, even with fuel and food and all those problems, there are all of those areas are also needs for the future, and they will attract investment, because that is what happens. Not just in this particular market period, not just during permanent distortion in the last 15 years, but that's what happens if you step back in time and just generally look at investment patterns over the longer haul. So I think those are the two things that I keep in mind. And I think also be informed, just kind of check in, obviously, but don't be freaked out by the day-to-day sort of turbulence of headlines and everything. Just kind of do something to detach just a little bit from that kind of sort of financial tension.
Okay, that's really good advice. Excuse me, got a cough. I can see Permanent Distortion just in the background there, and I'm like, oh
yeah, the book's just literally, well, you know what it is? I literally just got my books, my author's copies yesterday. So I got my 2 boxes of my own books. I unpacked them. I gave them, they many of them are spoken for, but literally those are hardcovers just from the box.
So how can people, I guess it's on Amazon and Booktopia and all sorts
of it's on all the regular channels. You can go to my website, which is www.nomiprins, first my last name.com. But yeah, it's on all the Amazons and all the local bookstores, and there's links on my site and all around the internet, really, for picking the book up. And it's less pages than my other books, not by a lot. So I have some very dense books. And it has a lot of good information, but it's a slightly quicker read. So there's that.
And I think that what we said earlier, not just about patient, be patient, read the book. It's about understanding the bigger forces and understanding what's going on. And what I really appreciate about what you do, Nomi, is the fact that you've been a Wall Street insider, if you like. You know how this works, and you're passionate about turning around and going, I don't want just Wall Street to win. You want everybody to win.
That's exactly right. I do.
So finally, I think you're coming out to Australia.
I am going to head out to Australia in March for a few weeks. I'm going to do crisscross. I'm doing east, I'm doing west, I'm doing north. And I'm really excited. I'm really excited that I'm going to spend that time out in Australia.
Well, maybe we can somehow organize to have a talk while you're out here, and people
That'd be cool.
Go and get the book, etc. But hopefully they'll have all bought the book before then. But for now, Dr. Nomi Prins, thank you so much for joining me on Small Caps today. It's been an absolute pleasure. Next time, we're going to get into precious metals and all that fun stuff as well.
Sounds good. Thank you so much.